Long-term borrowing costs are falling in the U.S. The 10-year yield is about 2%. Now, this makes dividend stocks a really good place to go for the short term. So, David, you are portfolio manager of stocks under 10. You also know a lot about dividend stocks. What's the yield you look for when you look into dividends?
Well, like you said, anything over the short-term rate right now is a good benchmark. Right now, both the S&P 500 and the 10-year Treasury are yielding about 2%. So if you can get anything 3-4% or higher, then it's very good right now.
And what's your time frame? I mean, when did dividend stocks become unattractive to own?
Really, I would say they don't ever really become unattractive to own. I'd say they're more attractive to own right now, given that we are in a low interest rate environment, but also the fact that really the stock market's done nothing when you look in 2011. If you get that 4 or 5% head start, you're already ahead of the game.
Now, how do you know if a dividend's actually safe?
Well, there's a couple things I look for. First of all, I look for companies that have a long historical track record of raising their dividend. You usually don't raise a dividend just to cut it. That happened a few times with the financials back in 08, 09. But also, you look for earnings coverage. I generally want to see at least two times more earnings than the actual dividend payout in the given year.
And along the same kind of lines, how can you delineate between a high yield because the share price is low and a stock that actually genuinely has a high yield?
Again, look at the balance sheet. Make sure that the company doesn't have too much debt. Look for the earnings and cash flow that are behind that. A lot of these companies we're going to talk about today have raised their dividends every year for the last several decades.
All right, so let's get to it. The three stocks you're kind of looking at for good dividend growth.
The first one I like is Duke Energy. The ticker there's DUK. The stock yields about 4.8%. It's a utility, and I like the fact that the company recently raised its dividend. It's been about 5 or 6 years now that the company's raised its dividend. Also, again, the thing with utilities is because their business is so regulated, they can usually afford to pay out a little bit more than 50% of their earnings.
All right, what's your next stock you're looking at?
The next one I'm looking at is Northrop Grumman, ticker's NOC. Again, the company could raise its dividend, I think, in April. Probably be the first of these three to raise its dividend in 2012. It's a stock that's underperformed, but I think it's the fact that the company's in the defense sector, which is out of favor right now.
Right.
But when you look at the stock, it's very cheap. It's trading at just 8 times earnings. There's been a lot of insider buying lately. And again, the good yield right here at 3.6%.
The last stock I know is Altria, but everybody goes to Altria for the dividend protection. Isn't that thesis kind of played out?
It is, but again, it's important that the company has very strong pricing power right now. Not everyone wants to buy into cigarette stocks for whatever reason, but the fact is the company's doing very well, very consistent grower. And again, this is a company that raises its dividend every year like clockwork, every August, 45 times in the last 42 years.
All right, thanks, David. I really appreciate it. So that is 3 dividend stocks you can check out for 2012.